Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday, November 1st edition of Benzinga's PreMarket Prep. Hope everyone had a nice Halloween and you're not in too much stomach pain this morning. I'm Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Big earnings day. A lot of stocks reporting yesterday and this morning, but a lot of big ones reporting today after the bell, specifically Tesla and Facebook. So we'll talk about those two. U.S. Steel, interesting last night. They were delayed on their report, didn't come out till very, very late. I thought that was notable. We'll talk about that. Bitcoin potentially getting some futures. We're going to talk about that as well. And our guest today will be Ivan Feinseth. He will join the show at 8:35 to talk us through his ratings. Joel, how's it going this morning in the market?
S&P's, the day's over. The range is in. We're averaging a 13-point range. That's what we have overnight. 84, that's a new all-time high, your pre-market high. We'll look for that to go up to 2,600. Crude, over $55. Breakout here in the crude oil market. We've really been hanging up here. Let's go to the daily charts, and you can see crude has not been over 55 bucks in a while. That's given a boost to the oil stocks. And for a change, gold and silver are in the green. Gold in the green by $7.50 at 1278. Just trying to cling to this 1265 support level. Silver just touched 1703.5, but up 26 cents at 16.96. Dennis, I want to start with a question. Do they have Halloween in Canada?
No, that's just a U.S. holiday.
That's just a U.S.
No
holiday.
Halloween.
So you didn't have to go trick-or-treating or anything?
Of course, I went trick-or-treating with Spencer there. Yeah, we took him to a subdivision over there, and he's 3 years old now, so he's really into it. He's got to go, oh, another house, but it's hard to stop him from, like, stopping at the house, sitting on their doorstep and eating the candy as he gets it.
What was he? What was he?
We went as a lion. We actually went as, because they got the four of us, so we all went as lions, tigers, and bears, oh my, from The Wizard of Oz. Do you remember that?
And so you were
Spencer
the bear?
was a lion.
You were the
Natalie
bear?
was the tiger. I was a bear, and Laura wore an oh my sign on her.
How can you be a bear when you're such a bull?
I know.
It makes no sense.
Joel should have been the bear. We should have had Joel in here for the bear. Anyways, we got home and threw all the candy on the floor, and everybody starts eating the candy. Spencer, I'm like, okay, well, it's Halloween, so we'll let him eat a little bit more than maybe, he should. And he's eating, and sure enough, just throws up all over the
Okay.
So he ate candy till I puked. And I'm like, yeah, candy's over now.
What a great parent. Boy, those parenting skills. That's when you know.
He didn't eat that much. We hardly give him candy because he's already so hyper. He got some lollipops and a chocolate bar, and then it was the sugary marshmallow that put him over the top.
Dennis probably after he puked, he said, okay, one more, and then you're going to die.
Well, now he's puked it all. You got to let him have some more now. He woke up this morning, he says, no more candy.
All right. We got a lot of earnings reports here. And I don't know where to start. You want to start with, let's start with Frankie's stock here. I know we don't talk about it a lot. Checkpoint, CHKP, beat on top and bottom, but lowered guidance. Spencer, you have that report?
I do here. For Q3, it's $1.30 versus $1.24, so good. Sales of $455 versus $449 million, so good. But like you said, they lower their guidance, so that'll hit the stock.
Dennis?
It'll hit the stock to the tune of $10. So, and obviously the stock had run up into the report, not as much as some of the other stocks have run up, but it has run up and near 52-week highs. And when you lower guidance and you're at a 52-week high, that's a recipe for a really bad day. Down 9%. Joel finds support though. BTFD, right?
Oh yeah. No, 106 is your pre-market low. I think not on for today. Look at this 105 level. I mean, not exactly 105, but you have a couple lows at 104.33, one at 104.98. So long term, I'd just like to see this find support at 105 and hold and regain its strength. Pre-market low, as I mentioned, is 105.60. Only $1.40 off that. So 105, that's the level of the day in Checkpoint Software.
Where do you want to go now? Because there's 219 stocks that report today. Now, that's some in the pre-market and a lot of them after hours, like we're going to hear from Tesla and Facebook and Qualcomm and FireEye. And
why don't we do ones?
And Yelp and all kinds of stuff.
Did you get rolled in any, or did you have good trades in any?
In any of these earnings plays?
Yeah.
From last night, I traded Triple D. I'm actually long on my invest portfolio, which is a horrible investment, might I say. But I actually shorted some SSYS against it last night and actually had a nice little trade on that. Got over a point as it pulled back and got under 21 bucks. So I had a little sympathy play off that. I was sitting there waiting for the US Steel because there's all kinds of nice sympathy plays to play off US Steel. And US Steel, and sometimes I like to play the leaders as well. And I was waiting, and then finally I had to take my kid trick-or-treating. So US Steel came out while I was out there trick-or-treating. But, let's go to US Steel because it's up 11% here. Huge gain here for the stock. It was actually, going straight down to the report. So it would have fit the bill that you don't have to do much to go up. Well, they must have said something really good because it's up 11%.
92 cents versus 71 cent estimate. That'll do it. Sales of 3.2 billion versus 3.06. So a nice beat on the sales and the EPS for the fiscal year. To see their EPS coming in at $1.70, which is 5 cents higher than the estimate.
And stock trading up 11% in the pre-market. This takes us right back to where we were a whopping 4 days ago.
I know.
The stock went straight down. What happened in the last 4 days to US Steel? Everybody thought they were going to be a bad report or something?
Well, AK Steel didn't help it yesterday.
Oh, is that what it was?
Yeah, but now the street leaning the wrong way into the
way. Nobody had this note.
No one had the note, but I'll tell you, I was chatting with Nick Shaheen, and this is such an uncharacteristic Nick Shaheen chart. He went lotto in this thing with some 28 calls. And I looked at the chart, and I'm like, this thing is going contrarian play, but he nailed it. Pre-market high, we're trading right at the highs of the pre-market session. Looks like your pre-market high is 28.50. Let's see what happens on the open right at this level. 28.50 is your pre-market high. Then you had the recent high, the move at, where was that? Just a few days ago, you got to 28.94. So let's see. You got some room up here. You run up to 28.94. That's your next resistance point if this can keep on moving.
Jump over here to another company that reported this morning. Actually, I wanted to go to generic GNRC. This is a little bit off the board, but this stock had been running straight up in the report. And you want to know something? I was going to go the other way on this just because I was actually long it. And then I ended up selling last night before the report. And the reason I was like, they got to blow it away with all the hurricanes and everybody else. Everybody's buying generators, aren't they? What were the numbers? GNRC.
93 cents versus an 88 cent estimate. Sales of
blow it away that much.
Sales of 457 million versus 420 million, so $37 million there.
Yeah.
They are also increasing their fiscal year sales guidance. They see their sales growth. They did originally see it growing 6 to 8%. Now it's going to grow 14 to 15%.
Oh, big raise. It kind of makes sense, like intuitively thinking. Like, we get hurricanes every season. And, usually these are hurricane stocks and goes up when the hurricane season starts and goes down afterwards. But everybody got really spooked this time around. I mean, these were some major disasters. And I think you got a lot of people that, their power out for a long time. All those people saying, I'm having a generator. So is this going to be short-term lived, for the next little while as people all buy their generators, in anticipation of the next storms? It's hard to say, but I think people want to own generators more than they did before this season.
Price discovery still working here.
2 points wide.
Yeah, 2 point wide, less than 500 shares have printed. You had a little bit after hours yesterday. I can't really make heads or tails out of this after hours chart, pre-market chart. So the only thing you can really do on this one is say that 52.63 is now support. That was the recent high that it made yesterday. We're trading in an area that we haven't seen since May of 2014. when you topped out at 58.04. But man, I don't know. Can go anywhere. But just to me, easier to identify the support than it is to find any resistance.
Well, yeah, and you're 2 points wide here. I like the guidance, but I don't know if I'm chasing. It's up so much. I mean, we went from $36 2 months ago to 52. Now we're going to 54 on the pre-market. We saw what happened with MasterCard. I thought this one could be different, and it is good guidance, but I'm just not 100% that this could, turn around and fade away too. Because I said it yesterday on the show, MasterCard running straight up in the reported pretty good numbers. It was trading up in the pre-market, and I said I wouldn't be surprised if this one would give some back, and lo and behold, market opens, and MasterCard opens right up near the highs and tanks. So you just got to look at those charts when they're coming into it, and a lot of stocks that they've, and the sales guidance is pretty good here, which makes me think it could hold on. Maybe that isn't going to follow through with this one, but the ones that are just slightly beating in the charts are straight up going in. They've been hitting those every single time. Did
you see where Kellogg got to yesterday?
Unbelievable monster. And this is the exact opposite of what we were talking about. When stocks are going, it still fits the bill. Stocks going straight down to the report and report a good quarter, they go up. And Kellogg's just kept running. I mean, these food stocks, they were selling these food stocks like people aren't going to eat anymore. Kellogg's and Campbell's and Mondelez, these things are all straight down disasters. And I mean, the multiples on them are a little bit high, but they're still defensive, and there's still, stocks that hold up well if we ever do get into a bear market. So I've always liked, people like to put gold in their portfolio. I used to always carry food stocks a little bit as insurance as well. I'm not carrying any because they had those big run-ups a couple years ago, and I sold most of my food stocks into it. I never rebought, and I'm still thinking I should rebuy, but that Kellogg's move, that was incredible.
Yeah, 64 got up to. I mean, I was looking at the highs at the $62 area. That ended up being the actual lows of the session, but got right up to 63.95 was your September 26 high. Stopped on a whole number there, just at 64.
Jump over here to the rest of the earnings parade, and there's just a ton of them here. Let's go Allergan, AGN.
Allergan reporting Q3 adjusted EPS of $4.15. So that's a 9-cent beat. $4.06 was the estimate. Sales of $4.03 billion, which is in line with the estimate there. They're also narrowing their EPS outlook for the fiscal year and their sales outlook. Not raising, not lowering, just narrowing the range.
Not a great report. Doesn't matter. It's been straight down, and the reports was getting a little bit of a lift. So that's the consideration here on Allergan. I don't know. I own this in my invest portfolio. I'm obviously, in a lot of drug stocks, my invest portfolio, and the drugs have had a bad 2 months. So I'm sticking with it here. It's got the 1.56% dividend. The multiples are all cheap. I mean, every drug stock, you got Gilead trading with like an 8. You got, Pfizer trading with like a 12 or 13 forward multiple. Allergan's probably, I don't know if you do the quick math, it's probably 15 or 16. I mean, these all trade way under market multiples. I still think if you're buying these drug stocks and sticking them away in your investment portfolio at these prices, I don't see how you can go wrong. If you look back in 5 years, aging population, we're going to need more drugs unless they just come through and do price fixing, on all the drugs and, and start to put price caps on stuff, which I don't know if I see that happening either, because you've got to encourage these companies to develop new drugs, and they need to make money so they can spend money on R&D to create new drugs to help, people, with diseases. So I just think, long term, I think the sector is really out of favor short term, but I think if you're looking at these things from a long-term perspective, some of them are dirt cheap.
Dennis, I think I'm going to have to come with a long-term thesis here to disagree with you on this.
Why?
Because of artificial reality and artificial intelligence, people are going to be healthier. They're going to be, because of all this new AI and AR, is going to help monitor their systems much better. People are going to be watching what they're eating, their intake, their exercise, and people are going to get healthier, and they're not going to need as much drugs. So all the drug stocks are going to zero. And invest in artificial. No, think about it.
It's an interesting thesis. I just believe that people, I think, there's people that want to be healthier, and maybe, there's going to be systems to monitor, different people, but I still think you need drugs. I don't know. But I don't think drugs are going away.
not as much. I think that, that's a big part. I think that's one thing that Gene Munster pounds the table on. And I think that's another thing that's kind of fueling this bull market, because everyone's worried about insurance costs and health costs. What if all of a sudden everyone's healthier and we don't have to be spending all this money on drugs and can go into stocks like GE and get it up over $20. I mean, I really think that is going to happen. And I'm going to write a long story on it today. AGM.
Jump over here. I have no comments on that. I still think drugs. The drug stocks are dirt cheap, and we've got Spinner saying cheap can stay cheap for a long time. It's a great point. I mean, if you're coming in these things for trades here, it's a completely different story. These things are completely out of favor. The momentum is not with you. And that is why, trading and investing are two completely different animals. On my trading portfolio, I've been trading long stuff like Square, trading long stuff like Yelp, trading long even stuff, that has been moving up like the banks. And I've been on my trading portfolio shorting stuff like the drug stocks. In my investing portfolio, I'm more of a contrarian. I'm going to stick with that just because it's worked for me. If, momentum investing works for you, great. Contrarian investing has always worked for me. I made most of my money in my investment portfolio when I was buying stocks in the financial crisis. And, sticking them in my investment portfolio and not looking at them. And when everybody is throwing things out and forgetting about them, that's sometimes the best opportunities. Like I said, when I bought Procter & Gamble, I bought it when everybody hated it at $68. When I wanted to buy Walmart, although it was too cheap, I was wanting to buy it at $58, $60 when everybody hated it. 2 years later, it's starting to get liked again. As long as your company's staying in business, that's why I'm not buying any of these department stores, because I don't know if any of them are going to be in business. But, if you think you've got a viable company that's in business, and when everybody's throwing it away, that's when I put in my investment portfolio, and I try not to look at it again. Because if you're looking at it, you're going to trade out of it, and you're going to end up selling at the bottom, you're going to have problems. So I try not to look at my investment. So I keep it completely separate, two separate accounts, one for trading, one for investing. Investing, I'm a contrarian. It's always worked for me, and that's why I'm sticking with it. And stuff like this, I put in my investment portfolio right now because everybody hates it. I think in 10 years, I'll be happy I own it.
Okay. Well, we will. That's a 10-year bet we have going on here. So
long-term bet. We'll bet a lunch on that. I think Allergan, we're at 179 in the pre-market here right now. I think Allergan is above 179 in 10 years. That's what I'm thinking.
Well, first it has to get through the three highs in the last four sessions between 181.09, 181.08, and 181.79. We did pop up to 185, but we're back down. So I'm looking at that. Just split all those numbers together. Call it 181.40. That's the bogey here to see if we could get more upside in Allergan.
Everybody's talking GE here. When we start talking about, investing, everybody likes to pick on me because I've had GE in there for 17 years. I say it about every other day on the show. Is it going to breach $20 here? Is it going under 20? I think so. JP Morgan today not downgrading, but they're lowering their price target. It's already out of sell or underweight or whatever. They're lowering the price target to $17. I mean, everybody does hate this stock. I'm not adding to it though. That was one thing I don't do is add the losers in my invest portfolio. I am probably sticking with it just because it's been there so long. But I mean, this stock is maybe, one that I wouldn't be adding in my portfolio. Maybe you should. Maybe you should be adding it because, everybody hates it right now. It fits the bill. But I think the dividend cut looming. I think, there's just so many issues there. They bought Baker Hughes right at the high. I'm just not confident enough to come in here and add to this position.
7-day losing streak, Dennis. 7 days in a row. And the thing that really baffles me on this one is how did everyone get it so wrong on there? You see that big green candle there? When that was on earnings day, and I'd hit open 22.10, ran to nearly $24. And I think this is exacerbating this whole decline because everyone was like, that's it. The bottom's in. They poured it in. What was the volume on that day? The volume on that day.
I thought so too.
192,404,000.
I thought that was capitulation.
Yeah.
You were wrong.
Wow. And that was a crazy day. How did everyone get it so wrong on that day?
You know what it is? Everybody and it's all short-term, traders that move price, like big institutions that move price too. But in the short term, and especially on earnings, there's a lot of traders in there. Everybody shorted it that day because they're like, this is a horrible quarter. We're shorting this. This is it. So they all short in the whole. And, then it wants to run over all those traders too. So all those traders that shorted at the open that day at 22.10 get run over as the stock runs up to 23.80, and the market likes to punish the maximum amount of participants. So it punished all those, short-term traders there. And, 2 days later, it's taking out those lows. So they squeeze those guys out. new stronger hands, new shorts coming in. You know, you always say, you know, it's got to like, so it's kind of the opposite of, you know, when a stock's going up, you know, pulls back and you get, you know, the turnover of the weak hands to the stronger hands. Well, the weak shorts to the stronger shorts. And here we are, we're going to breach 20 bucks. It looks like here today, General Electric. It's absolutely incredible fall from grace. I mean, really, when you put it in perspective, though, it's been a fall from grace for this company for 2 decades. 17 years ago, this was 60 bucks. I bought at 30 thinking I was getting a good company at half price, and obviously wasn't the case because we are here 17 years later and the stock's at 20.
All right. Other reports here. Did Apollo Capital Global Management, did they report? I see who's asking about in the chat here. Chef, did we get a report out of APO, or is it just up on some, just up because it's up?
We got some news.
No, we got it. We got it. Actually, it came in a couple minutes ago. Oh, no, that's a lie. It came in earlier this morning. Q3 EPS at $1 versus 61-cent estimate. Nice. Sales of 664 versus $503 million. So APO, very nice EPS beat, very nice sales beat.
I don't know. I don't follow this company very closely here, but, you know, charts don't lie, and this chart is now trying to break out and make new highs on the move as well. I don't know if this is all-time highs. I'm going back. No, if you go to the monthlies back in 2014, we were actually higher than this. But, you know, this comes a long ways back here, too. But, you know, stocks, it's so tough. I mean, you know, and this is why this market has been tough, because if you weren't in it, you basically had to chase. You know, that it's because the good get stronger, the good stocks keep getting stronger, and the bad stocks keep getting weaker. And it's the same thing every single day. I mean, Square goes up every single day. Alibaba seems like goes up every single day. And we talk about those imbalances. G goes down every single day. And if you weren't on those trains and you don't like to chase stocks, I mean, these trains have been moving for a long time. You pretty much had to, you know, jump on a moving train there to catch some of this, because even the S&P futures, I mean, if you weren't, you know, if you kept waiting for that 10% pullback, you never got it. You never got it like the last 5-6 years, really. Did we get a 10% pullback in the last 7 years? Like since like in 2011, we had that little problem over in Europe. But since then, so in the last 6 years, have we had a 10% pullback in the S&P?
I don't even think we've had. No.
I don't think so. We had the whole Ebola thing, and that hit us in almost down to 10%. I remember that one. That was like 2014, or what was it, 2014? I mean, the years just keep flying by here as you get older. I'm just trying to look at the charts myself. The Ebola low, yeah. So 2015 at the end of it, we went from around 208 on the SPY down to like 179. Like close. If we didn't, it looks like, yeah, we did. Maybe we had one right there. Beginning of 2016. I remember the Ebola thing. And then there was the oil crisis too, because oil was going straight down. Everybody's like, oh, that's terrible for stocks that oil's going straight down. But I mean, it's really been a relentless bull trend.
All right, Apollo, and I just asked Nick about this. I think over the last year or two or so, they made a ton of cash acquisitions, and just everywhere. I can't like in different sectors too, and that's obviously paying off for them. I see a 33 print, but it looks like an odd lot. I'm keeping an eye on 32.85. That's been the recent high of the move. After that, the next relevant level, 33.68. That was your high back in March.
Just going to the pro. You talk about acquisitions for Apollo.
Yeah, thank you.
They've acquired Club Corp in September. They acquired a stake in Tribune Media, TRCO. The Club Corp thing goes back a few months. They acquired West Corporation. That was WSTC. They that was for $2 billion. That was back in May or June.
Yeah.
They've acquired.
They do that though. That's how they do.
Yeah,
they buy companies.
They've made.
That's their business.
They've made a half dozen acquisitions this year.
Well, they made some good ones. I'm just.
The market's been straight up. So really, when you think about it, if you're buying stocks, and you know, we always joke, but you know, I'm. In my investment portfolio, what I got, like 104 stocks or 105 stocks I was looking at, I'm up in like 88 of them. I always, you know, talk about the losers just because like I said, I like you guys to be my sounding board. But, you know, I'm not a genius to be up in 89 stocks out of 104. It's not, you know, just that I'm awesome investor. It's the fact that we're in a bull market. So if, you know, in the financial crisis, I was down in like probably 75 or 80% of my investments. So there's been such a relentless bull market. And if you're a company that's just buying other companies right now, just by even sheer luck, you're going to, like not even luck, just like by the market impacts, 80% of companies are a hell of a lot higher than they were 5 or 6 years ago.
Did we do the Triple D report?
I know you were going to go to that one too, and that's why. Keep
Talk
picking up my
another
portfolio
loser.
here. I got Triple D in that one. That one's a dog, and that one's garbage. HPQ is going to eat everybody's lunch here, I think, in this business. But on the 3D printing market, it's getting destroyed. 3D is your biggest loser of the day. It's down 21%. And this is a stock that should not be in. It was a speculative buy. It should not be in my investment portfolio. I should probably just dump
Never buy stocks with your initials.
That's why I wanted it, because it had my initials DDD, and I was like, I always wanted that ticker symbol. If I ever went public, I was like, that's gonna be my ticker symbol. And then 3D Systems took it. They took it from me. So I own shares. So maybe I should just buy all the company, squash the company itself, and just take over the ticker symbol.
All right, what a horrible report. Let's go ahead.
So they were projected to gain 12 cents last quarter per share. They ended up losing 20 cents a share. So that's bad. Sales of 152.9 versus 162.9 million dollars. So they missed their sales by $10 million on the nose. They're also going to go ahead and just withdraw their guidance due to
we're done with guidance.
Significant transformation work ahead. So we're just going to withdraw it and pretend we didn't ever say anything.
Wow.
We're done guiding. We're done 3D printing stuff. I don't know. This is a mess. The stock was $95 or $97 back in 2014 when everybody thought 3D printing was going to be everything. And, it's $9 now. Can you say eventually maybe these things bottom somewhere? I don't know. Like, I just think HPQ is going to be the player in the industry. Are they going to do some acquiring to get there? Maybe, these stocks that they get really cheap, but I don't think they even need to do that. I mean, HPQ is the master of printing. They're going to figure out the 3D stuff, and they're going to dominate the market. So all the other players are going to be in trouble. Do you think that's my thesis on it? So you get 3D, SSYS, XONE, Voxel Jet. I don't know. All these things are going to be down today on the 3D report. And I just don't think, jumping in these things, even though they're dirt cheap and they look dirt cheap, especially relative to where they've been trading. Wow. Can they bounce eventually? Yeah, they've had bounces in there, but man, it's a mess.
This one, pre-market low, 972. You're 14 cents off of that. 10 maybe a psychological support level. Going back long term, Dennis, you don't want to hear this, but the next low I have on the monthlies.
I don't care. Honestly, it's dead to me. I might just sell it and I'll probably sell at the end of the year and just take the tax rate off on it.
Okay. February 2000. I mean, if it's still trading then.
In a month.
February 2016. You had a low at 740. I don't think you'll see that today. This one, just keep your eye on the pre-market low wherever it was. And if you get a flush out on the open below the pre-market low and you come back up, maybe you could try it as a whoops trade there, buying it on the way back. But just a question of whether or not shorts want to cover in this one. 4 cents off the pre-market low of 972.
Jump over here to the ratings for a minute. If you want to talk about another earnings stock, let us know. But there's so many that reported, we don't have time to cover them all there. But I want to go to a few big ratings from this morning here. JP Morgan is doing upgrades and downgrades all over the airlines here. Spencer, give us the details.
JP Morgan mostly bearish this morning on the airlines. Here is what they did this morning. Let me pull it up in my pro. There we go. JP Morgan. Here's what we've got this morning on airlines. Downgrading UAL from neutral to underweight. Downgrading Spirit Airlines, neutral to underweight. Downgrading Alaska Air, overweight to neutral. Downgrading JetBlue, overweight to neutral. And the coup de grace, upgrading American Airlines, neutral to overweight. So bullish American Air, bearish everyone else.
I don't understand that. I don't understand what everyone's going
to. These all move together, don't they?
Yeah.
Like for the most part, I guess the charts have kind of gone opposite direction. UAL is right near the lows. Spirit Air has come back a little bit and actually been kind of going up a little bit higher. American Air, AAL, has been killed the last few days. I don't know. All these airlines in the long run move together, though, I think.
I have to agree. So look at this. The move in American Airlines, 48.15 to pre-market high. As long as it stays above 47.67, you have two highs at that area. 48.89, that's your 3-day high. I don't know. I just can't get real excited about this one. I mean, to me, I agree with you, Dennis. A lot of overset supply coming down off the 53 level. But you may find a nice bottom there under $47. So if you're looking at this for a swing trade, don't want to see it take out the lows. You have like 4 or 5 lows at the 46.70 area.
Jump over to General Motors. Did they get downgraded yesterday? It was downgraded like a couple days ago.
2 days ago. 2 days.
Getting downgraded by Namura here today. So everybody's been ganging up here on poor GM the last couple days. It's getting downgraded. It's not down much. They're just downgrading it to neutral here. And obviously the market's up significantly as well. But you look at the Ford GM charts. Ford is trying to itch its way back up to the highs. General Motors significantly off its highs. I've just made. I think GM just got a little bit overdone. Correcting here now. I'd be interested in GM back, maybe the 50% retracement on the most recent move, Joel, which is say 35 to 47. What's that air math? $11, 5.5 off from the 47 high. We're doing a little rounding where it takes down to about 41.
Yeah, I don't know. There's just so much air in here. As you can see, you just filled one gap. Then you had that crazy day between 41 and 42 and change. So I don't know. I might get interested in this thing, get back under 40. Another gap to fill between 39.5 and 40. So, but the exact thoughts on Ford yesterday. Look at this. Is it finally playing some catch up here? Stuck under 12. But Ford, man, you just need to clear that 1245 area.
1250. That's where the big million seller is.
Yep. There's a million up there.
I think so. Let me go look at the book again. I think I saw it, from a few weeks ago when we were up here, but I think there was over a million up there. It's so littered. 1235 is 120,000. 1237, 60,000, 1239, 80,000, 1230, 75,000, 1240, 150,000. You probably got a million before you get to 1250, and then you got the bulk at 1250 as well. And that's just the ones that are showing their hand. So there's a lot of sellers in here.
Yeah, I don't know. Is it going to take some kind of news event or, electric cars?
It can chew through it. I mean, it's only a $12 stock. It can chew through it. It's going to take a couple institutions, that are saying, okay, we want to be in this. That's what it's going to take. So, whether, we're going to get that or not, it's still to be determined, but that's what it's going to take. And 1250 is where it's got to get through. It's going to be tough sledding until it can get through 1250. And then I think it opens up to 13.
Right.
So it's all about like trading. You want to find those, gappy areas where there's not a lot of orders, and that's where stocks can move through with more ease. When we see a gap in the chart, you can identify it, but you can also identify it in the book. You're just looking at the limit orders in the book, and the book is thick on this. Why is it thick? Well, you had so many institutions that got up there 1235, 1237, 1238 on the first time. They didn't sell, and then went back under 12. Now they're willing to sell the second time up there. So, a few institutions, are blocking you right now. So if you can take those guys out and then get up above 1250, it opens up again. So that's why breakouts tend to work as well. I mean, it all goes back to order flow. You can look at, technicals all you want, but what makes up technicals is the order flow. So you got huge, active buyers taking out the, the passive limit orders, the stock price moves up. You have, huge active sellers taking out the passive buy orders, the stock moves down. And that's kind of how it works. And a lot of these orders sit on the books for a long time. People put good tail cancel orders out there. They put orders out there for months on end. And those orders, until they get taken out, will hold a stock down. And that's what we're looking at in Ford is we got a lot of orders before 1250. If you can take all those out, get above 1250, I think it opens up to 13.
Yeah, and also need some news. Frankie23 likes the fundamentals in Alta. I mean, that stock is just fallen from grace here. Let's see. Get a little bit of consolidation here between 187.96 and 210, the low of the move. I don't know. I mean, it's showing support here. I really think you need to get that close back over 210 to really get it moving north, but it's trying. I don't know. Don't really know the great fundamentals of the company.
It's a victim of the whole
Amazon.
Growth to value. And I've talked about this multiple times on the show too. When a stock has growth, you have all the growth investors and growth traders that are in there. And when it stops growing earnings or growth starts to slow, that's when the growth guys back off. Well, the value guys like me are sitting a hell of a lot lower because we don't buy stocks with multiples of 40. So that's, where it comes in. And that's why you see the stock prices when they go from these growth to value, it takes so long where it's a correcting process there. If the growth comes back, the growth investors will come back in. But, the value investors, it's a little too pricey for it. That was the whole Under Armour problem as well. and I can just analyze my own, analyzing it because I like stocks when they get cheap. And I started looking, at Under Armour. I wasn't looking at it when it was 45. I started looking at it when it was 20. And I'm like, well, the multiple's still like 30 on that thing. It's still too high for me. So I'm not touching it. Now Under Armour is $11. So the growth guys don't want it. The value guys don't want it. Stock price goes down.
Spencer.
Yes, my
Ivan
turn.
Feinseth?
Yeah, Ivan Feinseth will join us in a moment. He is the partner and CIO at Tigress Financial Partners, and we'll be right back with Mr. Feinseth to talk about his stock coverage.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alcon, along with Dennis Dick, Spencer Israel working the boards, and we're joined by Ivan Feinseth, partner and CIO at Tigress Financial Partners, and also a guy that got a little ink in Barron's. Was that last weekend or the weekend before?
Yeah, this past Saturday on Target.
Okay, on Target. Well, before we go to Target, let's just talk about the overall market and bullish momentum. You gave us a price target. Give it to us, and then tell us how you derive that price target.
Well, my year-end price target has been for quite some time 2,700 to 2,750, based on the growth momentum in the market. We are, experiencing incredible earnings momentum, and I think it will continue. We have a huge amount of cash on both investor sidelines and on corporate balance sheets. We all looking for a better return. So the market closed for October up 2.21%, one of the top quartile returns for October in the past 30 years. So basically, we're 150 points or 5.8% away from my midpoint S&P 500 target, which I think is easily in reach. So I recommend being fully invested because this market's going higher.
All right. Saying it with confidence. Let's just talk about Target. Now, looking in the retail sector, there's not much to be optimistic about, but what do you think? Target here has a chance. Give us your breakdown for Target.
Well, my retail picks really focus on companies that have unique differentiating factors and good omni-channel capabilities. Target has tremendous omni-channel fulfillment capabilities, and what that means is you can buy in the store, take home in the store, buy online, pick it up on the store, buy online, have it shipped to you, buy in the store, have it shipped to you. And they fulfill all of those needs. Second is they have unique product offerings. They value price. They have merchandise that's specific to their store. They have a positive shopping experience. They have their own credit card and reward program, so they connect well with the customer. So they give people reasons to go to the store.
All right, then the chart hit 64, backed off here at the $59 area. We will keep, and they closed down all the Canadian operations. I guess they took the hit. They moved on from that. So in this bullish environment here, there's a lot of stocks getting killed too. Some of these healthcare stocks. Is there anything in the healthcare sector that's catching your eye, or are you looking other places?
My focus is in other places. My expertise and interest and focus is consumer product, consumer service, specialty retail, tech, media, telecom, and the auto sector.
Okay.
So
all right.
I really don't have the expertise on healthcare.
All right. Let's talk about the auto sector then. GM, nice bump, and now the street is ganging up on it with a couple downgrades. Let's talk GM, Ford, and Tesla.
Well, I have a strong buy on GM. I've had that for quite some time. A buy on Ford. I've been neutral on Tesla, even though I'm a big fan of Tesla. And if you can stand the volatility and stomach the valuation, then I think the benefit of the doubt to Tesla is still on the upside. I think most people want to see Tesla succeed, except for maybe the other auto executives and a handful of short sellers. I have tremendous respect for the CEO, Elon Musk. The product is just incredible. They are incredibly innovative. And I think the stock, with volatility, will trade higher. They have never minded that Elon has never made a deadline, yet he somehow keeps it going. The Model 3 is a game changer, even if production has not met the original guidelines he's given. There's strong demand for it. All of the other auto manufacturers that are now focusing on introducing new electric cars over the next few years will be positive for all electric cars, including Tesla.
All right. So do you have a price target on Tesla?
I really don't use price targets. I can just say when I think a stock is going higher or lower. And I think that I would say Tesla ends the year somewhere between 375 and 400.
All right. And then you mentioned consumer products is an area you like to cover?
One of my favorite stocks, and I've been early on it, is Garmin. I was one of the only buys a few months ago when the stock was in the 51 range. They just reported a blowout quarter. Garmin is one of the most innovative technology companies. They produce incredible products, and everybody still thinks all they make is the dashboard navigation, which nobody buys because everybody's got their same functionality on their phone. Yet their big area is flight decks. The next is marine, and they make some of the most innovative consumer products and fitness wearables on the high end. And they just continue to innovate. They announced a bunch of marine products yesterday, aviation products, and here's where the real upside, in my view, the stock exists. They make autopilot systems for planes and for boats. They make GPS technology. They also make cameras. And when you put a camera together with GPS and autopilot, you have the components for a self-driving car. I think, and they have over 20 OEM relationships with all the leading auto manufacturers. I think you'll see at some point Garmin partnering with Waymo or some of the auto manufacturers to create autonomous vehicle technology.
Wow, because it's interesting. It's funny that you said that. And Dennis Dicker, because it's something I've always said. Don't they just make GPS systems, and can't you get that on your iPhone now? So it's interesting that you bring that up to us, that they make so many other things.
They incorporate GPS technology into state-of-the-art products.
Jump over into some of these other stocks, and I don't know if you want to go into some of these momos, but I just want to talk Apple for a second, which is all of a sudden a momo stock again. I mean, this stock has blasted off 14 points in the last 3 days, and obviously, this is kind of your growth, and it still has growth as at a reasonable valuation here. What are your thoughts on Apple as it's kind of gone parabolic here in the last 4 days?
Well, the most fascinating thing is that all of the supply chain leakers, every time the supply chain leakers have come out and said that Apple's order demand is slowing and there's issues with the supply chain and there's delays, they've never been right. Jim Cramer pointed it out the other day. The supply chain leakers, if they're that close to Apple, they won't be leaking. And if all these leakers, they've been so wrong, they must not be that close. I mean, they said that Apple has come out and said, please cut back on production of components for the iPhone X. Yet the iPhone X demand is now a 6-week wait, which is now probably longer because they announced a 6-week wait a few days ago when it goes on sale on the 3rd. The demand for each iPhone is greater than the one prior. And I don't know why anybody listens to these naysayers. Apple manages the supply chain incredibly well. They've done it since the original iPhone. They got better with the iPhone 8.
And you're talking about that move that we had back down October 18th and 19th when they came out that the supply chain. I forget who reported it. I think it was actually a report, maybe even coming from China, and the stock went down $3 or $4 that day. And here we are, 2 weeks later, and the stock is now 15 points higher from that point in time. So buying the pullbacks in Apple seems to continue to work. What about Google? Google is been a monster stock here as well. It made new highs on the earnings, kind of pulled back from its high after the earnings. What are your thoughts on Google?
I'm still bullish on Google. I think it goes higher. And Google, Apple, some of these stocks, they never miss twice. If they have an off quarter, the next quarters are usually very strong. So, you have to really understand the position of these companies and how they innovate and how they integrate with almost everything they do and their unique value proposition. And anytime you have a chance to buy these stocks on a sell-off, history has shown that's what you must do. So until it no longer is the case, then I say you still buy on any weakness because these stocks can still go higher. And also, many skeptics of this market rally continue to say it's led by narrow group of stocks. Every market rally in history has been led by a handful of leaders.
Great point.
Whether you go back into the 60s with the Nifty 50 and anything with Onyx in the name, they had the history of bubbles, and anything with electronics, photonics, bionics in the name were love stocks. Now there were booms and busts, and some of those Onyx stocks from the 60s don't exist today, but a few do, and a few have gone on to greatness. And you look at the leading companies, and what's most interesting about them, they are intellectual capital intensive companies, not financial capital. And they make huge returns on capital, which is what I look at, because economic profit, which is the return on capital minus the cost of capital, is what really drives shareholder value creation. The more the rate of change of return on capital slopes positively, the faster and higher a stock will go. And all of these companies, Microsoft, Google, Apple, Facebook, even Tesla, who kind of says they're a technology company. Even GM is evolving into a technology company with focusing on autonomous technology and electric cars. These technology companies those are the big drivers of shareholder value creation.
Just to echo the point that you made about Apple and the suppliers, when Gene Munster of Loop Ventures was in the office last week, I asked him about that, and I asked him how he reacted to those reports, and he said basically the same thing. They said Apple, they might tell a supplier twice as much as they know they're going to need originally, just to have the supply there, and that they, then when they cut it in half, someone reports that it's a big deal, but maybe they were at 50 million units or something, and they cut it down to 25. So, it's one way that they manage the supply chain. We're on the line with Ivan Feinseth. He's the CIO of Tigress Capital Partners. You mentioned
financial partners.
You mentioned consumer durables. Procter & Gamble fall into that?
Well, I focus on consumer. I'm not a big fan of the durables because we are in a growth phase. So I think the opportunity, first of all, we are at a record level of employment. Wages are rising. The wealth effect of the rising stock market and a good housing market is also powerful. I think we're going to have a very strong holiday season. And I also think consumers are spending, and they also will spend on consumer electronics, especially the iPhone. So the market is showing that people don't mind paying up for an expensive phone because the phone is the most, it's a very important part of people's personal and business lives. And it's also been shown that Samsung is selling, the new Note 8 is selling well, which is also a $1,000 phone. So the price of these phones and the price of things I think consumers are willing to pay up for. One of the other shifts that has happened over the past few years is that consumers are spending a little less on things and a little bit more on experiences. And that's why I like the travel industry, specifically the cruise stocks. I think there's huge opportunity in the cruise stocks, and they're only limited by their capacity, which is limited by the number of ships that get produced. And my number one pick in the cruise industry is Norwegian Cruise Lines.
And CLH, and some of those have actually pulled back and not participated in the most recent rally. So if you're looking for something that where the train hasn't been moving, maybe that's a stock that's interesting.
They were weak because people don't really understand the impact of the hurricanes. The impact don't really, it's not really negative because unlike hotels that if people cancel or they get damaged, the cruise ships can just go around the problem. You can just move the cruise ship in another part of the world and offer a cruise to go someplace else.
Right.
And cruises give you the best value for your travel dollar.
One more stock here, Ivan. I'm not sure if you cover it, but somebody from the chat's asking about Macy's, and the stock obviously has been in the gutter. People are concerned that the dividend is not safe. It's now 8.03%. Any thoughts on Macy's or the other department stores?
Yes. Now the retailers I like: Target, Macy's, and Nordstrom's. And I've been wrong on I've had a buy on Macy's all the way down, because Macy's is, to me, one of the best omni-channel retailers. But all of retail is being left for dead, yet almost 90% of all retail transactions still occur in a brick and mortar store. So I think Macy's markets well, they merchandise well, they segment their market well, they have great presence. They're in the right places. They don't have a lot of real estate in the wrong places. So when people start to realize that there's some value in the retailers, I think number one will be Nordstrom's, and number two will be Macy's, and number three will be Target.
And what will derail this bull market, if anything?
The sadness of the events that happened last night in New York, global issues. We really haven't heard much from Kim Jong-un recently, but global events that are negative have a sobering effect on maybe consumer and investor optimism.
Ivan Feinseth, partner and CIO at Tigress Financial Partners, joining us here on Benzinga's Pre-Market Prep. Thanks, Ivan. We'll speak to you again soon.
Thank you.
All right, S&P futures 2 points off the high of the session. 24.84 is your high, trading at 82. We missed some stocks here in the chat, and I just want to go back up. We were talking food stocks and Hormel. I'm not sure when they're due to report. Probably the chart's looking similar to the other ones coming off.
They all got a big pop yesterday.
Yeah, off the Kellogg's?
Yeah, off Kellogg's and Mondelez.
So you're looking for the 2-day move?
Yeah, you know what? You could say there could be a 2-day move in some of these things. I think I'm not getting that excited on some of these because the move was so extreme yesterday. I mean, yeah, Hormel's got good room to 32, but 32 is a brick wall up there. So if you're coming here and buying at 31.16, probably with the futures being up, you're probably going to have to pay up even a little more than that to get it, maybe 31.25. I see like 75 cents upside here, and then obviously downsides to where it just came from. So risk return starts to get a little bit suspect here around 31.25. But if you're following the 2-day move, that means there is room to 32.
And just going on the charts here, you got two highs to contend with. One of those highs being from Tuesday at 31.20, and then another high on the 19th at 31.28. So clear that 31.30, and you're looking good here in Hormel Foods. Also, a question here about Fred department stores, and that thing completely fell apart in the merger. It was part of the Walgreens Rite Aid thing, and it kind of got left out in the dust. The stock, I don't know. I can't find anything good to say about it. Dennis, can you?
Which stock are you talking?
Fred, F-R-E-D. Fred department stores.
Yeah, I don't know if I'm jumping into something like this. This is the exact chart I don't want, because again, this stock was $21 back in the day in 2016. It's been straight down here. I don't follow the story fundamentally. I can just tell you when a stock chart looks like this in this type of market, there's some serious problems here. So, and this one's just been going straight down. I mean, the easiest, path of least resistance has been lower and lower and lower. So I'm hands off on this. I'm not going to try to call low on this FRED. People have been trying to do that all year, and they've been getting burned for it.
All right, OSTK, that was another stock that we talked about. That's had some nice moves lately.
Been a monster. Exact opposite of Fred.
Oh, what do you got going on here, though? You got three highs over 46. Let me see before I speak if it's doing anything.
It's up another buck. I don't know if they reported, Spencer. OSTK report?
I don't.
Was there news, or was this just up on momentum?
No, I
it might just be momentum. I mean, stocks go up 1.8% now on no news just because they got the momentum.
All right, you got wow, look at the dailies here, and you got a potential breakout here. 46.90 was the high of the move, and that was from the 27th. So above 46.90 breakout mode, last print at 46.80, and you know what? It's not backing off. So you can see some more. That was the thing about Kellogg. It got up near that 62 resistance, but it wouldn't back off and ended up blowing right through it off the open. So 46.90 is the key in overstock.com.
Let's go look at imbalances again. They are growing here this morning. Alibaba is now 235,000 shares to buy. That whoever that institution is buying it every morning is up a lot of money because they've been doing that for 2 months, and the stock's basically been straight up from the 160 area up to now 185. Jumping over AT&T and Verizon, both selling balances, 103,000, 57,000 to sell, respectively. One consideration this morning is TLT is down. That is good for the financials. Actually, TLT has bounced back here now. But the financials were trading very strong here this morning. And sometimes you see stocks like AT&T and Verizon go in the opposite direction. What do you think, though? So here's interesting charts here because you got AT&T and Verizon. They had the absolutely ridiculous run-ups ahead of their ex-dividend dates, got murdered after their ex-dividend dates, at least Verizon, or at least AT&T did. Now they're talking even as a dividend safe here and stuff on AT&T. I think it is. It's 5.81%. Full disclosure, I still own AT&T in my invest portfolio. Trades like a bond. I don't know. Like Verizon, though, it's a little different chart than AT&T now because AT&T got beat up so much. Verizon looks like it's kind of hanging there.
Yeah, Verizon had that ridiculous pop over $51. I think I'm going to go. I would rather go with the AT&T. You're really developing some real good support here. 33.33. That was a low of the move. Two other lows in that area. Take 6% of that, a little downside protection. I think I might add a little bit of AT&T to my portfolio today just to get that juicy dividend. And, the other thing,
you're not scared of them potentially cutting it? Because that's what they were talking about on CNBC. I don't think so either. I think AT&T dividend's safe.
I do too. More safe than the GM. And the other thing, both of these companies made big acquisitions, right? And Verizon purchased Yahoo, AT&T picked up Time Warner. So, I mean, they realized that, they need to expand their business. And I think Time Warner was a better buy than Yahoo. So I like the AT&T, just the fact that it's pulled back and it's finding support.
Really looking at imbalances here. G is now 212,000. Actually, G is right at $20 here right now. It looks like it's going to take it out here today. Snap SNAP 61,000 to buy here. That one's notable as well. Square has grown to 117,000 to buy. General Motors 43,000 to sell. The downgrade of Mira keeping that stock down this morning. Ex-U.S. Steel, we already talked about 100,000 to buy in U.S. Steel. It's up $2.38 on there. Good report.
Yeah, are we getting any follow through on X here? Boom, boom. Let's take a look. It was over $28.
It's leaking a bit. That's a major resistive point, though.
Yeah, we talked about that. Over $28.
Yeah.
Let's go to the 15-minute chart. Ooh, 28.40. Yeah, you got your shot there. You can see it on the dailies that you had some. Whenever you get a couple pops, but not the close. Maybe one of those closes was over 28. So that's the big area in X. Dennis, someone asked about the banks here, and I just want to look at this Goldman Sachs chart here. They hit it off good earnings, right? Because the trading revenue wasn't as high as they wanted. And you got what, 5?
Which is obvious. I mean, the trading revenue is going to be lower. You're in a VIX environment. Every trader, unless you're a long only guy and you're just buying stuff, is a completely different story. Trading, and for a lot of these big banks, or market making and doing different, types of, like statistical arbitrage strategy, different types of stuff. Not just buying stocks and, the market goes up and you're going to be doing, because the market's going up, you're going to be doing better with your trading. The trading revenue is higher when the VIX is higher. And when the VIX is 9.83, all of these companies are going to struggle in their trading departments. Investing, completely different animal than trading.
So what do you think? You like a breakout here? Because like some of these other financial stocks, they had the good reports, and even though they got hit on the good reports, they came back. JP Morgan got hit a little bit, came back to make a new all-time high. Bank America got hit a little bit. That came back to make a new all-time high. Going 28. That's a major resistance level in Bank of America. But Goldman Sachs, respect the resistance for now, but potential breakout.
I think it's in the middle of it. I think, you're sitting here at 244. You're getting towards the upper end of resistance. Yep. Let's see what it does. If it can take out 247, start going, then you think 250 takes that out, then it opens up a bit. But it's hard to say. The banks have had a pretty good run here, and you look at them all. Bank of America, $28 and 23. The trend is your friend. These things are still trending higher. Rates look like they're going up in December, so that's another positive for the banks as well. But how much of that is priced in is always the question. So things change quickly here, but the bank's been on a good run. Trend is your friend.
All right, boy, Downward Dog sticks in a tough one here. K-A-R here. I see it trading up on some light. The one big print here. That's an odd lot there. That traded.
No, it had earnings.
Yeah, but traded one share at 53.63.
Yeah.
I can't
strike the 53.63 from the tape. It's offered at 50 right now. Nobody's lifting that offer at 50. It was trading 49.5 a little bit last night, but only traded like 500-600 shares after the earnings. So it reported earnings. I know you can look at the pre-market volume and say it's 4,900 have traded. That is not true because 47.33 was a late cross from the close. 4,900 shares traded on FINRA. Off exchange. So the on exchange trade is one share this morning at 53.63, and it's offered at $50 right now. So it's not opening at 53.63. It's probably not opening over $50.
And 48.65, that was the high of the move back on October 4th. So keep an eye on that. If you fall back to the close, you've had, a bunch of closes right around 1, 2, 3, 4, 5, 6, 7 closes between 46.87, 47.33. So call 47 major support. All right, 9 a.m. here, Spencer, in the Motor City. You want to wrap things up and preview Thursday's show?
Yeah, on the show for tomorrow, we're going to be joined by Peter Chur. He's from TF Market Advisors, and he just recently left Green Capital, I think, for a new gig. So we'll talk to Peter about that. But as far as today's show, you guys know the drill. iTunes, SoundCloud, Stitcher, and YouTube is where the show lives. You can rewatch the show with charts. You can listen to the podcast, whatever strikes your fancy on any of those platforms. But that's it for us today, folks. Have a good rest of your day. We'll be back with you on Thursday.